A very warm welcome to you and welcome to Great British Accountants. We are business cash flow specialists and tax advisors. We help business owners to maintain healthy cash flow levels in their businesses and always be in a position of strength financially. And we also help them plan their tax affairs so as not to pay more tax than they should legally do, not a penny more. Your journey to becoming more successful and prosperous in your business and career starts right now. In this presentation here, we're going to talk about the new tax year changes. The new tax year is upon us, starting on April the 6th. And we are particularly going to look at the changes as related to payroll. Now, many other countries around the world have their tax years running in parallel with the calendar year. In Ireland, the US, France, and Germany, for example, the tax year starts on January the 1st and ends on December 31st. But in the UK, for historical reasons, our tax year starts and finishes midway through. One of the first changes in payroll we're going to be looking at is with regard to tax codes. For 2021-2022, the basic personal allowance will be $12,570 for the whole of the UK. The threshold, the starting point, so to say, for pay-as-you-earn is £242 per week. That is £1,048 per month. The emergency tax code is 1257L for all employees. This is the tax code table. Like I said, the emergency tax code is 1257L. The L suffix uplift is about £7. That means add 7 to any tax code ending in L. For example, 1250L becomes 1257L. And for tax codes with an M suffix, there's an uplift of £8. In other words, add 8 to any tax code ending in M from the previous tax year. For the N suffix uplift is £6, and again, that means just add 6 to any tax code ending in N from the previous tax year. If you have employees without a new tax code, just copy the authorized tax code from the 2020 to 2021 tax year in your payroll records and continue to use it for 2021-2022 until such a time as you receive a coding notice from HMRC. Do not, however, copy or carry over any week 1 or month 1 markings in your payroll system. If you have any employees with a new tax code, that is, you have received Form P9T, make sure that you keep and use this form or any other tax code notification with the most recent date for each employee. And remember to update any tax codes where you've received Form P9T or any other tax code notifications after you've set up your payroll records. If you have any employees who are leaving, you do not need to change the tax code for any employee who leaves before 6th April. Even if you'll be paying them after 6th April, just use the old tax code. This does not apply to payments after leaving when you've already given an employee a P45. In these circumstances, tax must be deducted using tax code OT or SOT for employees who had an S prefix in their code, or tax code with COT for employees who had a C prefix in their code on a non-cumulative basis. If an employee starts between the 6th April and 24th May and gives you a P45, follow the instructions at gov.uk/new-employee. If you are an employer who has an agreed exemption from online filing and are operating a manual payroll, follow the instructions in the RT7 guidance for employers exempt from filing real-time information online. If you have an agreed exemption from online filing and will be operating a manual payroll, continue to use Taxable Pay Tables Manual Method, April 2021. Continue to use the Tax Tables A 1993, which have not been changed. The forms and guidance you need will be sent to paper filing employers automatically. You can get replacement copies from the employer order line on 0300 123 1074. And if you need more help or further guidance, you can find it online by going to gov.uk. Now, the second change we're going to look at will be in the UK rate of income tax. Now, we start off with the basic rate. The basic rate is 20%, and the bandwidth here is £1 to 37,700 after taking into consideration your personal allowance. The higher rate is 40%, and the bandwidth for that is £37,701 to £150,000. The additional rate is at 45%, and the bandwidth for that is from £150,001 and above. Now, to maximize your tax efficiency as a company director and shareholder in the 2021-2022 tax year, we usually recommend your company should pay you a salary of about $8,840 and dividends of up to $41,430. This allows you to use all of the basic rate band of tax where you pay tax at 20% and assumes you have no other income. Your total personal tax bill would then be around £2,677.50 on take-home pay of £47,592.50. If you take more income in dividends, you will pay tax on these at a rate of 32.5% as a higher rate taxpayer. We have further information on how much to pay yourself as a salary from your limited company. If you have any questions about how these amounts have been calculated, or you'd like your limited company to pay you more in salary, then you should speak to an accountant for tailored advice. If you don't have an accountant or are looking to switch, give our friendly team a call. And let me talk a little bit about dividend allowance. Now, the tax-free dividend allowance across the board for 2021-2022 tax year remains at £2,000. There are no changes to the dividend tax rates as well, but the thresholds have changed in line with the income tax thresholds. So the rates for dividend for the basic rate taxpayers is 7.5%, the higher rate taxpayer is 32.5%, and the additional rate taxpayers is 38.1%. In terms of the Scottish rate of income tax, as you can see, Scotland has five rates of income tax with the bandwidth, as you can see here. So very quite straightforward. 19% between £1 to £2,097. Basic rate 20%, and this is the threshold here. The intermediate rate is 21% for a bandwidth income of between 12,727 to 31,092, and then the higher rate is 31,093 to 150,000, and the top rate 46% is for 150,001 and above. The Welsh rate of income tax is exactly the same as the UK one. Rate 20%, just exactly the same as the one for the UK. The fifth thing we're going to look at is the auto enrollment minimum contributions. contribution rates. And in looking at the auto-enrollment, we have to look at when are the dates of contribution what's the effective date for this change is from the 6th of April 2021 onwards. The employer minimum contribution is 3%. The employee minimum contribution is 5%. And the total minimum contribution, therefore, will be 8%. When you work out how much to pay into your pension scheme, you need to know what staff earnings to use in your calculation. This will depend on the type of scheme you choose. If you pay the minimum of 8%, you will need to base your calculation on a specific range of earnings. The lower level of qualifying earnings remains at £120 per week. That is $520 per month for 2021-2022 tax year. The upper level of qualifying earnings increases to £967 per week. That is £4,189 per month for 2021-2022. These figures are reviewed each year by the government. You will also need to include the following types of staff pay in your calculation: salary, wages, commissions, bonuses, overtime, statutory sick pay, statutory maternity pay, ordinary or additional statutory paternity pay, statutory adoption pay. So let's look at the statutory payment rates. What change has happened in this tax year for this? And the statutory payments we're looking at are the SSP, statutory sick pay, SMP, statutory maternity pay, SPP, statutory paternity pay, the SAP, statutory adoption pay, SSPP, statutory shared parental pay, and statutory parental bereavement pay, I believe, the SPBP. If we look at this a little bit in more detail, the type of payment or recovery, if we look at the statutory maternity pay, weekly rate for the first 6 weeks is 90% of the employee's average weekly earnings. The statutory maternity pay weekly rate for the remaining weeks, it's £151.97 or 90% of the employee's average weekly earnings, whichever is lower. The statutory paternity pay, the weekly rate, is £151.97 or 90% of the employee's average weekly earnings, whichever is lower. The statutory adoption pay weekly rate for the first 6 weeks is 90% of the employee's average weekly earnings. The statutory adoption pay weekly rate for the remaining weeks is £151.97 or 90% of the employee's average weekly earnings, or whichever is lower actually. Statutory shared parental pay weekly rate is £151.97 or 90% of the employee's average weekly earnings, whichever is lower. Statutory parental bereavement pay weekly rate is £151.97 or 90% of the employee's average weekly earnings, whichever is lower. So what is the proportion of your payments that you can recover from HMRC from the SMP, SPP, SHPP, SAP, and SPBP? Well, 92% if your total Class 1 national insurance, both employee and employer contributions, is above £45,000 for the previous tax year. So you'll recover 92% of any statutory payments that you pay out. And you recover 103% if your total Class 1 national insurance for the previous tax year is £45,000 or lower. Next, we move to student loan rates. Is there any change here? Well, so the rate of threshold is there. Employee earnings threshold for Student Loan Plan 1 for the 2021-2022 rate is $19,895 per year. For Student Loan Plan 2, the threshold is $27,295 per year. Employee earnings threshold for Student Loan Plan 4 is £25,000 per year. Student loan deductions at 9%. For employee earnings threshold for postgraduate loan, it's £21,000 per year. And the postgraduate loan deductions is 6%. Only thresholds are different for both the plans, but the calculation method and deduction rate, the 9%, remains the same. The postgraduate loan deduction will remain the same. The employee earnings threshold for postgraduate is £21,000 per year, and loan deduction rate is 6%. The next change we look at is company car fuel rates. So this is depending on the engine size. For the petrol amount per mile for engine size of 1,400 cc or less, it's 10 pence. For the liquid petroleum gas amount per mile, liquid petroleum gas cars, the amount per mile for those is 7 pence. For engine size between 1,401 cc to 2,000 cc, it will be 11 pence for the petrol amount per mile. And for the LPG, it will be 8 pence per mile. And if the engine size is over 2,000 cc, it will be 17 pence per mile on the petrol amount, and for the LPG, it will be 12 pence per mile. For diesel cars, the details are here. The engine size 1,600 cc or less, it's 8 pence. Between 1,601 to 2,000 cc is 10 pence, and over 2,000 cc it's 12 pence. Hybrid cars are treated as either petrol or diesel cars for this purpose. The advisory electricity rate for fully electric cars amount per mile is 4 pence. Electricity is not fuel for car fuel benefit purposes. Just make a note of that. Now, we'll move on and look at employee vehicle mileage allowance. And mileage allowance payments are what you pay your employees for using their own vehicle for business journeys. You can pay your employees an approved amount of mileage allowance payments each year without having to report them to HMRC. To work out the approved amount, multiply your employees' business travel miles for the year by the rate per mile for their vehicle. Now, if we look at the type of vehicle here and the rate per business mile for 2021-2022, for a car, for tax purposes, it's 45 pence for the first 10,000 business miles in the tax year, then 25 pence for each subsequent mile. For national insurance purposes, it's 45 pence for all business miles. For motorcycles, it's 24 pence for both tax and national insurance purposes, and for all business miles. For cycles, it's 20 pence for both tax and national insurance purposes, and for all business miles. Moving on, we'll look at the changes in the national minimum wage rate. What changes have taken place here? Now, the category of the worker, if the worker is age 23 and above, the national minimum wage rate, hourly rate, is £8.91. If they're aged between 21 to 22 inclusive, it's 8.36. If they're aged 18 to 20 inclusive, it's £6.56. If they're aged under 18 but above compulsory school leaving age, then it is £4.62 per hour. And if they are an apprentice aged under 19, it's £4.3 per hour. And apprentices aged 19 and over, but in the first year of their apprenticeship, it is £4.30 per hour. The national minimum wage is the minimum pay per hour almost all workers are entitled to by law. If you're not so sure, go to use the national minimum wage calculator on gov.uk to check if you're paying the worker the national minimum wage or if you owe them payments from past years. These rates shown here apply from 1st of April 2021. The next thing we'll look at is employment allowance. Employment allowance allows eligible employers to reduce their annual national insurance liability by up to the annual allowance amount. The rules regarding which businesses qualify for the employment allowance will remain the same. The amount of employment allowance is not changing and will remain the same at £4,000 for 2021-2022. It is important that you understand these new rules before claiming the employment allowance for 2021-2022. The holiday pay average in the spring budget of 2020, the introduction of a national insurance holiday for employees that hire former members of the UK regular armed forces was announced. The holiday will exempt employers from any national insurance contributions liability on a veteran's salary up to the upper secondary threshold in their first year of civilian employment. The employee will still be liable for national insurance contributions. This relief will be available from April 2021. Employers will be able to claim this relief for 12 months starting from the first day of the veteran's first civilian employment after leaving Her Majesty's Armed Forces. Subsequent employers will be able to claim this relief during this 12-month period. See the National Insurance Contributions Relief for employers who hire veterans for more details. We'll then look at as well the earliest full payment submission, FPS. It is now possible to send a full payment submission for a previous tax year and after 19th of April in the current tax year. From 2021-2022 onwards, you can no longer send an earlier year update to correct any mistakes made in the previous tax year. You can only send an year-to-date YTD full payment submission to report revised year-to-date payment data after the 19th of April. We will now move on and look at off-payroll working. Off-payroll working rules change on the 6th of April 2021 and are applied differently. From this date, all public authorities and medium and large-sized clients will be responsible for deciding the employment status of workers, sometimes known as contractors. In off-payroll working, the workers provide their services through an intermediary. The intermediary will usually be their own personal company, a partnership, or a managed service. The rule governing off-payroll working is known as the IR35. From 6th April 2021, all public sector clients and medium or large-sized private sector clients will be responsible for deciding your workers' employment status. This includes some charities and third sector organizations. If the off-payroll working rules apply, the fee payer, the public authority, agency, or other third party who is responsible for paying the workers intermediary must calculate the deemed direct payment to account for employment taxes associated with the contract, deduct those taxes from the payment to the worker's intermediary, report taxes deducted to HMRC through RTI or full payment submissions, and pay the relevant national insurance contributions. If your worker provides services to a public sector client or medium or large-sized private sector client, they should get an employment status determination from the client, as well as the reasons behind that determination. They will be able to dispute the determination given to them if they disagree with it. If your worker does not get an employment status determination, this may be because they are providing services to a small-sized client in the private sector, as the rules are not changing for these clients. Your worker can ask for confirmation of the client's size, and the client will have 45 days to respond. If the client confirms it is a small-sized organization, you as the intermediary, usually a limited company, will be responsible for determining your worker's status to see if the off-payroll working rules apply. Different rules apply if your worker does not get an employment status determination from the client or provide services to small clients in the private sector. Check gov.uk website for more details on IR35. We'll look at next the employer payment summary. Are there any changes here? The new change in the EPS from this tax year onwards are that you need to fill the additional information about the employer before you file the EPS to HMRC. The additional information required is the economic activity details, which include: is the employer in agricultural sector? Is the employer in the fisheries and agricultural sector? Is the employer in road transport sector? And is the employer in the industrial sector? Then we'll finally look at the Coronavirus Job Retention Scheme. The Coronavirus Job Retention Scheme is to be extended until the end of September 2021, with the government to continue paying 80% of the employees' wages for hours they cannot work. Employers will be asked to contribute 10% for July and 20% for August and September. That brings us to the end of this presentation, and thank you for joining us. This has been a presentation by Great British Accountants, and my name is Sterling Lips. Bye-bye for now. Take good care of yourself and make sure you have cash flow in your business.